from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde in for Emily Chang. This is Bloomberg Technology. And coming up in the next hour, supply chain pain. Amazon shopping for used long-range cargo planes to move products across borders itself, while Apple cuts its iPhone 13 production by 10 million units in 2021. What this means for the consumer prices. Plus, we'll hear from Blue Origin's first ever fee-paying customers on the company's most recent flight. We'll get details on the whole experience from booking their seats to touching down. And our exclusive conversation with Clubhouse CEO Paul Davison from the Goldman Sachs Builders and Innovators Summit. Find out what he has to say about the highs, the lows of super fast growth for the social audio app. That's later this hour, but first, well, we want to get to those market moves. I mean, what a day. Kriti Gupta, Ed Ludlow with us to break it all down. And, well, some seismic moves. NASDAQ, I think, best day since May.
Absolutely. Some green on the screen, Caroline. And it wasn't just the NASDAQ. You saw that tech trade really trickle into all the subsectors. The stocks index, for example, up a whopping 3%. Even the NASDAQ biotech up 1.3%. But what was underneath? What was happening? A lot of this had to do with earnings, Caroline. People were really waiting for that chance to buy. And earnings, you had a lot of heavy hitters. United Health, Walgreens, and, of course, the big banks. So you eventually, after weeks and weeks of selling pressure, this is what you see. But let's just talk about the breadth of the rally, because you can't just have tech leading the indexes higher. And that was actually not a concern today, Caroline, because if you look at the tick index, which really measures the advancers minus the decliners, essentially how much of the stock market is in the green, well, the highest level since all the way in March. If we go back to that level in March, that goes all the way back to June of 2020. So by those measures, Caroline, a pretty good day for the stock market. I want to show you what didn't have a good day, though, and it's those Chinese ADRs, because that tech trade, well, it stops at China, and a lot of it has to do with an article that showed up on the People's Daily, essentially what is seen as the mouthpiece by many for the Chinese government, coming out and actually saying that some of those online brokerages, those Chinese online brokerages that are listed in the U.S., well, they might be violating some of the Chinese data policies that are set to go effective on November 1st. So you see some of those ADRs that have a lot to do with that space in the red. But besides that, Caroline, a lot of green on the screen. That's what I was watching on the macro front. Let's get to the micro with Ed Ludlow.
Yeah, that kind of risk-on sentiment really carried over into cryptocurrencies as well. And I'm looking at the Bloomberg Galaxy Crypto Index, up by more than 3%, rising for a second day, highest level since May. I don't know, some bullishness returning to cryptocurrency markets. The Bloomberg Galaxy Crypto Index, of course, is largely Bitcoin, 40% in terms of weighting. But the month of October has been good, right? We've been on a bit of a tear as Bitcoin's kind of rebounded from that July low of under $30,000. We're now hovering around $58,000. So I've been tracking that. Of course, a lot of stocks on the move as well on Thursday. Particular stories that we're watching. Interesting. Taiwan Semiconductor out with earnings, saying that demand is still robust for the semiconductor sector, right? They're going into the fourth quarter. Demand is so good that they say full year sales will be up in dollar terms by 24%. Really interesting. Discuss with Mr. Ives later on in the show. Uber, interesting Bloomberg scoop out of Europe. According to sources, Uber is thinking about expanding its grocery delivery footprint in Europe. They're even getting ambitious, thinking about delivery times less than 15 minutes from app to door in that grocery space. Of course, a very competitive market in Europe. And one of the laggards, you heard Kriti talk about some of those Chinese ADRs. Pinduoduo down by 3.6%. Worst decliner on the NASDAQ 100. Biggest points laggard on the NASDAQ 100 as well. Really feeling the pressure of late with that Chinese regulatory clampdown. Very finally, let's talk about Apple really quickly. Finally, rising on Thursday by more than 2%. A really big gain, but more importantly, snapping 4 straight days of declines. Its worst losing streak since June. Caroline.
A little bit of a reprieve there. We thank you both, Kriti Gupta, Ed Ludlow. Great pace. Let's keep it up now. We're going to discuss Apple that little bit more with it succumbing to supply chain woes. I want to bring in Wedbush Managing Director Dan Ives. Dan, what do you make of the snarls within the supply chain that finally hit Apple and Apple significantly? Will they be able to sustain this sort of demand even if we're having to wait that much longer for our watch, for our phone?
Yeah, and I think it speaks to just the headwinds that we're seeing coming out of the Asia supply chain. The fact that Apple, in the midst of this peak iPhone 13 cycle, looks like it's going to cut 10 million, potentially 8 million units. But to us, it's more of a timing issue. I mean, demand continues to outstrip supply that's a high-class problem. Supply chain clearly an issue for Apple. But ultimately, this really means that you're going to see about 5 to 7 million units pushed from the December quarter to March. I ultimately view it as a non-event for the stock. Still think this is on a path to a much higher, what I've used a $3 trillion market cap into early next year.
So, Dan, they have the loyalty that people will just suck it up. They will wait. Who doesn't have the loyalty? Who's going to lose out if they cannot get their phone, their product to you within a matter of weeks?
Well, and that speaks to a broader issue because Apple, given 97% retention rate and this super cycle playing out, it's a timing issue. But then when you look really across technology, I mean, that's why there's more worries when you look at some of their competitors, the likes of Samsung, some of the Android competitors. And I think what you could start to see here is ultimately the ones that are able to get their hands on the chips, the ones that could almost alleviate to some extent some of the supply chain issues, they're going to be the winners. And I would just say, given what we're seeing in the supply chain, a 10 million unit hit for Apple, I mean, that's just a little bit of a bruise that they continue to move on from. I think others are going to see it much more dramatically going into holiday season. That's the big worry.
Yeah, and of course, you're a man who covers not just Apple, but Tesla, General Motors. This all really started to show within the auto sector. That's where, of course, the slightly cheaper chips are going. The chip makers, the foundries didn't prioritize those sorts of ones in terms of their supply chain and getting it to them. We've got Tesla's numbers next week. Are we expecting this sort of supply chain issue to spread far and wide? Is there any industry, any company that you touch that isn't going to be hit in some way?
Well, I think everyone's going to be hit to some extent, and you even see that with Teflon like Apple getting hit. You look at Tesla, and we'll see next week. I mean, those deliveries, what they've been able to do with that back-end swell in the supply chain has really been unbelievable. Relative to an auto industry, we've seen GM really have almost hurricane-like headwinds on the supply chain. I think that's sort of front and center. But you look at Tesla, much more efficiency that we're seeing, and I think that's really what's enabling it to sort of navigate this unprecedented situation. But it all just continues to come down to demand. I mean, you look, Tesla doesn't have a demand issue, has a supply issue, and now Berlin, Austin coming on going into next year. I think investors are, and you're seeing the stock, they're looking at the forest for the trees on the Tesla story.
I mean, we go on and on when we're looking at a more macro perspective of inflation and supply chain issues being transitory. We're hearing them of various forms of saying transitory in some way or other, whether it be about your monetary policy makers, whether it be about overall corporate leaders as well. How transitory is this supply chain issue from your perspective? When we're seeing TSMC come out with its sales growth, still saying, look, despite the snarls, they're having some great numbers. But do they push it into 2023? How long are we going to be living with this?
Well, I think it's all about moderation. I think right now investors recognize, I mean, the New York City cab driver knows that there's a supply chain issue. But if it doesn't start to moderate by, call it January, February, that's when we have a broader issue. That's where really prices start to spike and get passed through. As of now, it's containable. Street's looking through it, even with 3Q numbers. But I think as we start to go through, that's where the rubber meets the road in terms of a moderation. We believe at this point, bark's worse than the bite, and that's sort of been our call on these worries. You continue to buy the secular winners across supply chain issues, as well as just big tech and software.
Big tech, software. What are you expecting in terms of the question mark of pricing power? Because this is where big tech has actually started to outperform in this inflationary environment. People are feeling they can pass it on, whether it be the form of Apple or Tesla in the price point, whether indeed it be Microsoft, who just have less labor, for example, or indeed have just higher margins that they can suck it up. Who has the pricing power that's going to win out, Dan?
Well, and then you have a company that we all know out of Cupertino, Monday, they're going to be launching their new Macs, new AirPods in the midst of a chip shortage that they feel comfortable that they could get their hands on. So I think it just shows you could see some pricing increases across the board. But what you're seeing on big tech is that they have that ability to pass through those price increases. And that's why those stocks continue to move higher. Street's recognizing that. And I think that's going to be sort of clear almost headline as we go through earnings into 3Q.
all important earnings. Already some 3,000 times the word supply chain's been used in earnings thus far. It's going to keep on ramping, but we're going to keep all eyes on the bottom line. Dan Ives, Wedbush, Managing Director. It's always so good to have your time. Meanwhile, another company Cut looks at is Microsoft. Well, it's pulling LinkedIn out of China, becoming the last major US social media provider to pull out of that country. Now, LinkedIn said it made the decision in light of a significantly more challenging operating environment and greater compliance requirements in China. And the localized version of LinkedIn has been in the region since 2014. Coming up, stocks roar back as earnings season kicks off, with big banks seeing a slew of positive results this week. We'll have the latest in terms of the tech angle to all of it. This is Bloomberg.
We're back. In other words, the activity levels and what goes on day to day is bigger than it was before the pandemic.
Those benchmark indices having the best day, the S&P in particular, since March, is better than estimated corporate earnings, and economic reports kind of outweighed those lingering fears about inflation pressures, supply chain snarls that could crimp growth. All major groups in the S&P 500 advanced. And get this, if you're looking at the banks, financials outperforming the KBW Bank Index surged almost 40% in 2021 so far and pushed even higher as those results from some of the largest financial institutions beat Wall Street estimates. For more, we want to bring in Bloomberg's news financial reporter, Shonali Basak, and talk to us about, on Wall Street, what we're seeing, the themes. So much has been looked at in terms of profitability. And is it technology that's helping drive that to a large extent?
No, what's interesting is technology is driving that only in terms of it being a huge part of the deal-making environment. So when people are doing deals, they are thinking about how they will transform for this digital landscape. You all of a sudden have Goldman Sachs talking about their creator economy a lot, going on Clubhouse. And, you know, we're at their we're at their innovators conference right now. But there's also this element of a lot of IPOs. You have JP Morgan, Morgan Stanley, each of those banks bringing in more than $1 billion worth of equity underwriting revenue in this quarter alone. And a lot of that is from this hot IPO market that we see continuing into October. Next week, we'll probably have WeWork as well.
We had GitHub today.
Exactly. So it keeps going. They keep doing well despite the volatility. So it hasn't been too volatile to throw things off. And so they are going to be able to continue to hire. You have James Gorman of Morgan Stanley saying they have 100,000 applications annually at the bank, and they are not cutting jobs. They're absolutely hiring. But for technology, you're right, they're investing. You have Jamie Dimon, name checking a firm, right? Saying that they are seeing the competition. They are seeing firms not just get into buy now, pay later, but other big areas that are posing real threats to the core credit business as we know it.
It's interesting, yeah, Charlie Scharf was being asked about that at Wells Fargo, about the buy now, pay later. What are they doing? Are they just taking the competitive threat on? Are they building their own? Because there were rumors, of course, that Goldman Sachs was going to build its own.
Yeah, so we had reported that Goldman was working with Apple to build a product like this. Citigroup has comparable products as well. They're putting them further in front of consumers, trying to make it more attractive. You have the other end of things, too, with more traditional credit cards. JP Morgan says, when they're thinking of acquisitions, they're thinking about what they could do to make the consumer experience more pleasant. Think about their acquisition, for example, with the Infatuation. They bought it to make things easier for them at the credit and consumer business and make experiences.
How? I still don't get the Infatuation purchase. What? It tells me about the restaurant I'm about to go to?
It reminds you of, for example, Amex and Zagat.
Yeah.
Right? Or Amex and it's not Zagat, which is the one they own. They own Resi. Resi, there you go. So it's to get more access to experiences that you would use your credit card for. And so travel, entertainment, leisure, restaurants, those are all things that for a credit card business is pretty key. So they're leaning into core credit. They're also leaning into more flexible solutions for their customers, like buy now, pay later or installment loans, and ways that they can get to the consumer money faster at a cheaper rate.
What about the talent at the moment? Because we've spoken a lot about this, junior bankers getting more pay. What about the engineers? I mean, they're costly. How are they managing to get in enough of them?
It's really interesting because for so long you had the engineers feeling like they came second to the bankers. I keep telling this to people that even though the junior bankers are getting more pay right now, banks, including Goldman Sachs, including Citigroup, have been investing so much in technology and automation at those businesses that you can see a lot of junior banker work getting snipped away. Things like making decks and valuations of certain industries and companies, that has been happening for some time now. Let's see how far that goes. Every bank we know is investing in analytics at their M&A business that just 5 years ago or 3 years ago, everyone felt that it was a person-to-person business only. And we know now that's not completely true.
And very briefly, what about just your average, like how are the apps going? How are people like, you know, the amount that we're doing payments, the Zells of this world, that's still crescendoing?
Yeah, this is worth taking a note at because you have Bank of America record digital adoption. So a lot of things that used to be hard to do online, like getting a mortgage, are now happening much easier. Some parts of the process almost entirely. So 40 million users at digital adoption for Bank of America alone. Headcount has gone down at that bank, not risen at that bank. So you can see those technology investments actually paying off. Let's talk about Zelle for just a second, Caroline, because again, 15 million users, up from just 6 million in the same quarter in 2018. So definitely millions flocking even on the traditional banking apps.
I mean, literally, the tailor down the road takes payment on Zelle. Shonali Basak, we thank you for Bloomberg News. All across Wall Street, she's been exhausted, I'm sure. Meanwhile, let's find out more about the future of the crypto sector in banking. I mean, we've heard Jamie Dimon weigh in. What did Banco Santander's chair, Ana Botín, think? She spoke exclusively with Bloomberg's Francine Lacroix about why she sees it as the next big thing, actually, and what regulation might come with it.
I think the next big thing, which is already here, actually, is crypto. So I think that is it's already happening. You know, we talk a lot about the CBDC, central bank digital currencies. The fact is you already have around 100 billion of stablecoin dollars, US dollar, fiat currency, digital currency in the US today, unregulated outside the system. And so how do we think about that? There's a huge amount of innovation happening, and in an area that is very much systemic. It's about monetary policy and, you know, how that gets managed, whether it's inside or outside the system.
So how do you look at crypto? And actually, do you have to be, as a chief executive chairman, you know, a believer of crypto to be able to write, you know, have the right products for your customers?
Well, we are sort of a leader in crypto. We issued the first end-to-end bond on the blockchain, which is the technology behind crypto. We have a very strong group, not huge, but strong group on that. And the big thing is, how will central banks want to manage this? Will they manage it themselves? Will they create a framework and tell us how to do it? Will they do nothing? I think they will be working with us, with the banks. And it's also what role we want to play in that value chain, right? Yeah.
And I mean, how many customers actually want to buy Bitcoin? Do they come to you, or, you know, to your cashier?
They actually do, but we've been quite slow in adopting that because of compliance and, you know, regulatory and risk appetite. But we're now getting into it, so we're now either about to offer or already offering crypto ETFs. So being very careful about the know your customer, but being able to offer the product.
Santander's chair, Ana Botín, on the future of crypto. Now, let's talk about Cathie Wood. She's also been talking a lot about crypto and joining the slate of Wall Street players, hoping that US regulators will soon greenlight an ETF tracking Bitcoin futures. A new ETF from Wood's ARK Management plans to invest indirectly in the world's largest cryptocurrency. ETF issuers have been rushing to submit applications for Bitcoin futures funds. Meanwhile, coming up, it was more than just Captain Kirk on Blue Origin's second crewed flight. So just how much did a seat on the flight cost? Our Ed Ludlow does his best to find out. That's next. This is Bloomberg. Well, William Shatner, he might have stolen the headlines when he became the oldest person to go to space. But Blue Origin's second crewed flight had some other milestones as well. The mission carried Blue's first 2 paying customers. Bloomberg's Ed Ludlow spoke with the pair about their experience from booking their seats to touchdown.
Blue Origin has an amazing sales team. In my case, you know, I know a lot of the Blue Origin team. They come to conferences that I go to. So I nag them every time I see them. I have to use, like, when are you guys flying? And they're like, join our mailing list and we'll let you know. And then, you know, when, you know, the founder Jeff Bezos was flying on July 20, they said, hey, you know, Jeff's going to fly. would you like to fly next? And I think Glenn and I both were like, hell yeah.
All right, Chris, there's one question that everyone wants to know. How much does a seat cost on a Blue Origin capsule?
I mean, I'll be the first to admit it's expensive, right? We're going to space on opening night. 2021 is the year we all get to go to space. I'm confident the ticket prices will come down and you'll all get to go. But yeah, the first couple are expensive, and I think it's worth it because somebody had to try it out. Be the beta testers for this new experience. So it's like an absolute pleasure to try it.
But what are we talking here? Hundreds of thousands of dollars, tens of millions of dollars? We have no idea. Give us a sense of the scale.
I'll see them, right?
It is worth it, and it is a privilege to be able to do this. And I mean that in terms of having the experience ourselves, but also we understand that this is the beginning of a space industry that is about access and equity in that access. It's about making things cheaper, making things more scalable. The privilege extends to being some of the people who get to fuel that for everybody else. And so we'll just leave it. It's definitely worth it from both those perspectives.
Chris, your crew mate, William Shatner, AKA Captain Kirk, he was clearly visibly moved and emotional when he came out of the capsule. Could you just share with us, what the experience was like working with him, being a passenger alongside him?
Well, I mean, we were all obviously starstruck when we first met him, and it was very exciting. And he's like, "Will you just get out of the sun and grab a drink of water?" And so we went and sat down and we started chatting. And fast forward, half a week later, almost 4 or 5 days later, he just was Bill, just a guy we're hanging out with. He's really funny. He joked a lot. He really, loved bonding as the team. It was his idea that we do a group thing in space together. That we spend, part of our time connecting as a team. And he's just a wonderful, warm, and very funny, human being to hang out with.
Reflecting that the two of you were the first paying customers, the first transactional customers in that sense. Over the last few weeks and months, there's been a ton of media reports about the culture within Blue Origin, the pressure the engineering teams are under to kind of ramp up activity, and also allegations from whistleblowers that some of that could give rise to safety concerns. How kind of conscious were you of all of that? And did it give you a moment for pause, in the weeks leading up to your launch?
One of our crewmates, and like Chris was saying, we trained together for a couple of days. We became friends. So we flew. One of our friends is a senior female executive at Blue Origin, and we've gotten to meet so many people along the way. I know from a perspective of being an executive in the industry, from my perspective of being somebody who thinks about aviation and research and risk mitigation. I mean, we're here because there's an amazing program around safety. And by the way, you don't have to take our word for it. You can see what happened with the flight. When the weather wasn't right, the flight was delayed a day. When there were things that we needed to wait for in the launch, there were holds. And so I felt completely comfortable and safe and had an extraordinary experience here at Blue Origin, and frankly, with everybody who we met along the way.
Blue Origin's paying customers there, Glenn DeVries and Chris Boshausen. Coming up, the CEO of GitLab will discuss the phenomenal rise in its share price on the opening and his now more than $2.8 billion valuation. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in New York. Let's get to the top tech stories. Bloomberg's Ed Ludlow is back with the latest on LinkedIn, Ed.
Yeah, so LinkedIn is going to shut down its localized business in China. It basically says there's a challenging regulatory environment in China, which we talk about every day at the moment. But China's internet regulator basically wants greater compliance. It wants more restrictions on the content shared on LinkedIn's localized platform. Let's bring up some of the details. Caroline, you and I have discussed over a number of years, and Emily on this show, about how LinkedIn was kind of a shining light, right, for US social media companies in China, because frankly, it was the only one that was able to operate. Remember, LinkedIn made a deal with China to have a platform in the country but restrict the types of content on its platform. Now the regulator is saying that it's sharing too much political content, and so it's simply going to bring down the platform as we know it today in that country. What I found fascinating is when you dig into Microsoft's financials, for fiscal full year 21, LinkedIn was 6% of Microsoft's revenue. Of course, that's globally, but it's interesting how important that platform is to Microsoft in the bigger picture. Question now, what is LinkedIn going to do about it? It was the only social media platform from the US able to operate in China. We'll bring up this quote. It's simply going to scale back what LinkedIn is to Chinese consumers. There's around 52 million users in mainland China of a LinkedIn product. So this is what they're going to do. Later this year, we'll launch InJobs, this new standalone jobs application for China. InJobs will not include a social feed or the ability to share or post articles. In other words, LinkedIn is going to replace its platform with simply a job postings site and leave it as simple as that. But it's a real blow because, we know Facebook, we know Google have made sort of attempts to get into China, never been successful. This is kind of the final blow, really, for US companies that wanted to have a social media presence in that country. Caroline.
Fascinating. Now, let's look at a company that now has no headquarters, was already the business for making remote work easier and faster before the global pandemic ever hit. GitLab, the all-remote open-source developer, started trading on the NASDAQ on Thursday. It finished the day up almost 35%. The CEO is now joining us with GitLab, Sid Sijbrandij, who joins me from the NASDAQ in New York, where your company is now worth, more than $14 billion. You yourself have a valuation of more than $2.8 billion. What an extraordinary day. Just tell us how you feel, Sid.
Yeah, thanks, Caroline. It's an extraordinary day, and we're super excited to take the company public. Every company needs to become a software company, and we're making the leading DevOps platform to do that. We believe this is a $40 billion market, and we're so glad to see investors recognize the opportunity.
You get subscriptions from corporations UBS, T-Mobile, and the like. You, of course, make revenue. Revenue's been soaring, particularly amid the pandemic, where everyone suddenly realized how much more of an online presence they needed. But have you brought forward a lot of your sales? Can you sustain that sort of revenue growth?
Yeah, we believe that for companies to become software companies is not related to the pandemic. It is something every company has to become good at. With GitLab, companies are able to deliver to their customers faster. T-Mobile was able to deliver 10 times as fast to their customers. Goldman Sachs was able to go from 2 weeks to 2 hours to improve their most important application. That's the kind of results companies can get when they go from doing it themselves to a DevOps platform.
And what's so interesting is, of course, you were able to do remote work before remote work became a necessity. What is your playbook here when you're talking to your clients or subscribers, T-Mobile, Goldman Sachs, who suddenly are wanting to develop their own applications remotely? They want to collaborate using GitLab. How do you say the best way to thrive within this environment really is? How do you build great products such as GitLab when you're all in completely different countries?
Yeah, we believe we were the largest remote company before the pandemic. And during the last 2 years, we shared a lot of the lessons, including organizing informal communication. But for every company, whether you're remote or co-located, it's important to get everyone on the same page. With GitLab, they're in a single application, one interface, and it makes them more productive, makes the software more secure, and it helps people deliver more value to their customers.
You're sitting in New York right now. Where do you usually sit? Because technically you're headquartered in San Francisco. Do you sit at home? Are you nomadic? How does your day-to-day look?
If you look at our S1 filing, it says headquarter not applicable. We don't have one. We don't have offices. We do have a lot of team members. I'm in the Bay Area, but we have team members in 65 countries. And we have thousands of our users and customers who are able to contribute to the DevOps platform because we're open source.
But so talk us through it, because there's a couple of other companies that are, technically not got any headquarters. How do you support a equal working relationship? How do you make sure that everyone feels that they're seen by their managers, that they're collaborating, that they're enjoying their work-life balance when perhaps the balance becomes unstuck because you're always working when you're sat at home, or indeed there's managers worrying whether they're working or not enough? How have you struck that balance? What are the best ways to work right now?
We think it's incredibly important to be family and friends first, work second. And what we do is focus on results. At GitLab, if you're a manager, you cannot thank people in a public setting for working outside of office hours. We want people to be able to have a flexible workday, work when they want to work. And we find it incredibly important to be efficient so that we work less hours total, but achieve bigger results for our customers.
Of course, just take us back for a moment. Through a small team back in 2015, participating in Y Combinator. Did you ever think that a focus on open source, a focus on collaboration would ever get you to actually a listing, to this sort of valuation, to being so well, sort of focused on now making money?
When I saw GitLab, I thought it makes so much sense that a platform that you use to collaborate is something you work on collaboratively as well. Our customers, for them, GitLab as a DevOps platform is super strategically important. And they want to make sure that when they need an improvement, they can contribute it. And because they then share it with the world, we co-create GitLab. And that allows us to do more for more companies in a way that really appeals to people.
Sid Sijbrandij, we want to thank you, CEO of GitLab. Congratulations. It was a pretty great debut today. Coming up, how a fintech company hopes to address systemic issues in the world of personal finance and provide opportunity for underserved communities. We'll talk with Capway's CEO. That's next. This is Bloomberg. Now, in Japan, Nintendo's pricier new Switch video game console made a pretty late debut. That's despite a pre-orders selling out in a matter of minutes everywhere in the nation. Now, it's a surprising result, likely due to, well, a low level of supply, of course, stemming from the all-important component shortages. That supply chain issue, it gets everywhere. The new Switch costs $350, $50 more than the original one. Now, of course, this week we've also had thick and fast bank earnings. They've all been talking about inflation, supply chain. And as we hear from major institutions about the results, their compensation bumps to attract key staff, it can be easy to forget that, well, more than half of consumers in the United States today live paycheck to paycheck. In fact, we're seeing, 20% of those that are currently being reviewed at the moment in certain surveys saying, well, actually, they've eroded all of their savings. Sheena Allen's with us. She's the CEO and founder of Capway. It's a fintech company designed to provide equitable, inclusive financial access and opportunity for underserved and underbanked communities. She joins me now, and I love your Twitter handle. Who is Sheena? Who are you, Sheena? What is it that you're building?
Yeah, I'm a young lady from Terry, Mississippi. I come from a underbanked community. Mississippi has, unfortunately, the highest population of unbanked and underbanked residents. So this is my second company, and I'm here to actually challenge the financial system.
Your first company, photo-focused mobile app startup. Why then this pivot towards finance? Why did you see such a need for change, for solving here?
You know, it was actually with my first startup, me kind of traveling between the Bay and Austin, and I was noticing that more and more restaurants were saying no cash allowed, debit or credit only. And then I would go back to Mississippi, and mainly people only carry cash. Cash was still king. And so it kind of clicked to me that one day this cashless economy is going to affect even places like Mississippi, Alabama. And this was well before the pandemic, well before the cashless economy was really expedited. But that's where the idea for it actually came about.
So tell us how you go about fixing this. How do you make the unbanked banked?
Well, there's a few things. The core of what we do is digital banking. But I always say, and I'm very clear on that, banking someone is just part of the journey. And so with Capway, our goal is building an inclusive financial system where that banking is a piece of it, but there's other things that come along with that. There's financial education, there's credit, there's teaching them how to invest. It's how do you actually pretty much put someone in the period of getting them on a marathon to financial health. Once again, banking is a piece of that, and it's the core of what we do. But it's a system. This is a marathon. And that's what we do at Capway.
This is a marathon that needs to start with people at a younger and younger age. We've had the Hope Organization, John Hope Bryant, for example, raising the flag. You've had, the forcing of, when we looked at the introduction of, the meme stock craze, the focus on Robin Hood, the ability to start to put your money to work, the hope, the prayer that we can start to erode inequality by allowing people to be able to put their own savings to work. But we need to also start with financial literacy to a large extent. At what point is that happening? Are you able to provide financial literacy? How are you getting that to the younger at the moment?
Yeah, so we make it very gamified. We make it very relatable. So sometimes financial literacy, it kind of comes off with a negative connotation. And so for us, it was how do we have uncomfortable conversations, but in comfortable settings? How do we talk about things that is way more relatable than just trying to go in to talk to somebody about how do you budget? Because the truth is, kind of what we're talking about in this segment is trying to talk to someone who is living paycheck to paycheck about you should budget and do this. Well, they're struggling already. So sometimes they budget by default. And so there's a conversation that kind of needs to be had that I think in the traditional world hasn't been had in that way.
Yeah, Sheena, how do you do that without patronizing? Is it through the world of social media? TikTok has a great platform for being able to sort of make learning about financial education fun and inclusive. How are you doing it?
Yeah, different ways. Social media, of course, we do it through our own platform, but it's also, to your point, it's the wording of it, because you don't want to make someone feel like that doesn't fit me. And so whether we're talking about, I'll give you a perfect example. Even when we were speaking about why you should get a bank account, why you should move away from payday lending, check cashing, and you go to one person and you're like, hey, get this bank account. You shouldn't be using the check cashing places. And they're saying, I'm tired of paying overdraft fees. There's a reason I cash my check and pay $10 versus paying $36. So for us, it is very much social media. It's in-person experiences, of course, now hopefully coming out of this pandemic. How do we actually get boots on the ground? But once again, from a digital piece, our platform, social media, we got to mix it all together. There is no one answer to all of it.
Sheena, how are you making your voice heard, making sure that at Catway you've got the funds you need? I know that you've taken money from the Opportunity Fund over at SoftBank. Well, I had the privilege of interviewing Shunyata last week and having this interesting conversation about, of course, wanting to be there, be a growth fund aimed at people of colour, but sometimes people of colour, such as yourself, just want to be recognised as a great entrepreneur, not always taking money from that sort of the money just designated for people of colour. How are you finding the ecosystem wanting to give you funds right now?
Yeah, it's crazy because as a Black woman, we receive less than 1% of BC dollars. And so you would think, hey, you can't be too picky. But I'm actually very picky about who invests in us, who's on our cap table, because I want people who get it, who understand. I tell anytime I'm talking with an investor, I always say, if you're looking to invest in another fintech company, because fintech is hot right now, just because it's cool and we're going to fit line by line what you see with other fintech companies, we're not the company for you. This is a product, this is a company, this is a system that is going to be different probably from what you've ever seen before as we go along our roadmap. And so I look for investors who truly get it, who truly trust me as a founder, who truly trust what we're building.
What is what you're building in terms of how big you want to get, how large you want to be geographically? Where do you want to take Catway?
This is the plan without question, is to be a global company. But the issue is not just in America. The reason we started here in America is because a lot of times when we do speak about inclusive financial services, unfortunately, we think outside the US. I remember when I first started this company and I was speaking to a lot of investors, they actually didn't even understand that so many people in America didn't even have access to banking. I spoke a lot about unbanked and underbanked, and it was kind of a learning lesson for a lot of the investors I was speaking of. And it was interesting because when the pandemic happened and stimulus checks went out, and then you had the government kind of saying, oh, we have to figure out how to get paper checks mailed out because so many people don't have bank accounts. And I think that was what woke a lot of the investors up that we had spoken to previously of the pandemic.
Talk to us about, therefore, the administration, whether federal law will change to make it a more inclusive environment to get financial services. Does anything need to change there?
I think if there's a change that's going to happen, I believe it will happen with this administration. And because they've spoken so much about postal banking, they've talked so much about being more inclusive, I think they've done a great job of recognizing that there is a huge financial gap in America. And I think, once again, not only is it this administration, but I also believe it came with the pandemic really exposing this issue.
And it takes, unfortunately, a health crisis to get us there. But now we hope that we can build back stronger in some way. Catway CEO and founder Sheena Allen, they're doing it, trying to be inclusive within finance. We thank you. Great to spend some time with you. Meanwhile, coming up, we're going to hear from Clubhouse CEO Paul Davison about the app's evolution, future of social audio. That's next. This is Bloomberg. the future of audio, in particular social audio? Well, when the Clubhouse app started, social audio was a pretty novel concept. Now competition is getting fierce. Twitter Spaces, Facebook Live audio rooms. So where does Facebook and Clubhouse fit into all of this? And where are they headed next? Emily Chang, our CEO, Paul Davison, the very question on Wednesday at the Goldman Sachs Builders and Innovators Conference. It's over in California. In an exclusive interview, take a listen.
You know, we always say audio, it's a relatively new medium in the world of social networking, but it's the oldest medium. We've been gathering with other people in small groups and talking since the beginning of civilization. It's the foundation of civilization. And it's been growing quickly because of things like AirPods and smart speakers and text-to-speech technology getting good enough. And so it's been really exciting to get to lead the charge in this new space. As you mentioned, there are other people getting into audio, and that's not surprising. I think it's a durable medium. It's something that everyone's going to want to do. And the way that we think about it is focus is really important. When you look at networks that have grown in the past, we've seen that when a new medium emerges, it's usually a company that is fully focused on that medium that ends up being the category leader. For text, we had Twitter. For photos, we had Instagram. For video, we had YouTube, and now TikTok. And we think with social audio, it'll be similar, where being able to focus solely on that medium is going to be a really big benefit.
So let's talk about a community that has grown in the past, and that is Facebook. Obviously, Facebook facing a lot of controversies right now, and it seems like on Clubhouse, you can find your tribe, whatever that tribe is. How are you thinking about building sort of conscious community? And is that even possible on a global platform?
I think it is if you build the network structure the right way. We've always said on Clubhouse, creator first, which means that if you're the creator of the room, then you get to determine who's in the room. You get to determine the rules of the room. As long as they don't break the community guidelines of the overall platform, you can bring people together the way that you want to bring people together. And I think if you can give people the right containers, if you can allow them to gather people in a small room or a big room of their choosing, if you can help them form clubs and groups the way that they want to form them, you can scale that intimacy and you can allow people to shape it in whatever direction they like, while still growing as a big global platform.
Now, when we last spoke, I believe it was February, Clubhouse had lit the world on fire. Everybody wanted to be on Clubhouse. Now I'm hearing people saying Clubhouse has peaked. How do you respond to that?
Boy, I think we grew way, way too fast earlier this year. You know, I mentioned earlier, we've always tried to grow the platform in a measured way. And when you grow too quickly, things can break. And honestly, that happened to us earlier this year. It really stressed our systems. We grew much faster than we had ever expected. And we were 8 people at the time. So we had to scramble. We had to build out the team. We had to build out the infrastructure so that we could handle that sort of scale. We had to launch on Android. We had to get past the invite model. And now our team has grown from 8 people at the beginning of the year to more than 80. We built out all that foundation and all that infrastructure, and we're finally at the point where we can sort of take a breath and really focus on the long term, focus on steady growth.
So what can you tell us about user growth now, the pace, and do you see it sort of reaccelerating to that sort of February high, or do you see, you know, kind of a more steady uptick?
I think steady is the goal. I think steady always has been the goal.
Yeah.
When we looked at the metrics that we really think about are really around engagement. How many rooms are getting started every day? How much time are people spending in the product? Are they having a good experience there? So room starts is one thing that we look at. And earlier in the summer, it was something like 300,000 rooms that were getting started a day. By the end of the summer, that had gone up to 700,000. The average listener spends more than 70 minutes a day in the app right now. That's been going up over time too. So what we really want to do is be on that path of steady, gradual growth. And we try to stay really heads down, focused on the product and the community and the long term.
And coming out of a pandemic, what's your level of confidence that people are going to stick around for Clubhouse when they have, I mean, here we are, your first in-person conference in a really long time, right? There are other options.
Rohan and I have been building social apps for a while. We met a decade ago when I was working on Highlight, and we often think about durability. What makes a platform durable? Normally new platforms emerge when there's a new medium. Text, photos, video, and we think spoken audio is another one. And spoken audio, it's such a universal thing. Voice, it's the first thing you hear when you come out of the womb. It's something that everyone does. And we think that's durable. You know, the best communication products, they don't invent new behaviors. They take things that we've always enjoyed doing and they just make it dramatically easier to do that. So when you come out of the pandemic, I think that's going to be really good for the platform. You're going to have people commuting twice a day. You're going to have people going to the gym. And I think it applies to other products too. I don't think people are going to stop using Amazon because they can go shop in person now. I don't think people will stop online dating because they can go to bars now. It's a complement to the real world.
Facebook, TikTok, YouTube, they are throwing billions of dollars at creators. What's the plan to pay creators? Is there a plan to pay creators? I know you have the Creators Accelerators program.
Yeah.
And how do you see that relationship evolving?
So we've said from the earliest days that we want to build a platform that puts creators first. And really that means if you're hosting rooms, if you're making the effort to bring people together, we want to make sure that you're in control and that we have a business model where we're only making money as a company if you're making money as a creator. Okay. So we started by launching a payments product earlier in the year, and it allows people to pay each other on the platform. And if I pay you, 100% of that goes towards you. There's a small processing fee that goes 100% to our payment processing partner Stripe, and we take none of it. We're really excited over the next few months to launch additional features that allow creators to get paid directly by happy listeners who want to thank them for the experiences that they're creating. So subscriptions, paid rooms, in-app tipping, brand sponsorship, things like that are what we're investing in right now.
Clubhouse CEO there, Paul Davison, at the Goldman Sachs Builders and Innovators Conference. Now, that does it from Bloomberg Technology today, but tune in tomorrow. Coming in from Stanford, California, we'll be covering the Bloomberg Business Week Best B Schools for 2021-22, hearing from Miriam Nafisi, CEO of the design company Minted. Also going to be hearing from Cormac Kinney, Diamond Standard founder and CEO. So much to chew on, you don't want to miss it. From New York, this is Bloomberg.